All right, good morning, guys. Today is Wednesday, July 26th. As usual, we'll be going over analysis for US 30, gold, and EU. So currently you can see US 30 is pumping up heavily. The death cross that I've been waiting for in the 15-minute did come up. So we got a death cross and then we got a golden cross. So currently I hedge my position, so I'm locked into a sell and a buy in order to hedge. And then I caught the other sell at the bottom. So technically right now I have two sells running and one buy going. If we do get another golden cross right here, my account that copies the trades will automatically enter into another buy. So ideally, I would be hedged with two sells and two buys. So today, as much as I've been waiting for this sell, one red flag today was the FOMC at 2:30. So days like this, you just expect a lot of manipulation before the actual move happens later on. So I really didn't like how the entry came up today. But anyway, either way, right? So long as it aligns with the strategy, for me, I just go ahead and take the trade. Now, we do have a head and shoulder pattern on the hourly time frame for US 30. We do have the left shoulder here. We do have the head here. We do have the right shoulder here. Also, we do have this trend line to the upside that, in my opinion, should protect price to the downside or still hold this right shoulder. So what we would be wary about here is if price broke and closed above this trend line to the upside. But so long as price remains below either this lower high right here, which would be the right shoulder, or price remains below this trend line, it's just going through the motions. Also, if we turn on this, you can see we do have a bunch of sellers here and we do have an hourly bearish OB at the top there. But I know we also do have an hourly bullish OB right here. So for me, again, I am still bearish on US 30. When it comes to gold, I did send out this yesterday during the live session when I was analyzing. I did mention, like, if you're interested in buys or if you're to look for buys, you'd wait for price to break above this trend line to the upside and then wait for closure above and then wait for retest and closure above. And at that point, you could have entered into a buy for gold. For sell, I mentioned the same thing, right? It would have been break and closure above, retest, close below, and continuation. But we did get that break away. Same thing for EU. I did mention when I was talking about the importance of this new trend line on EU. From this higher high to this lower low, I did mention that what this new trend line was telling us is that if price breaks away from it, closes away from it, and retests and closes away from it, what EU was telling us here is that, hey, I may be changing bias for longs. Unfortunately for EU, yesterday I did not have any entries for EU based off of where price was at, other than the 30-minute bullish OB. I hadn't seen this hourly bullish OB, so and we did have buyers there. And I think actually for you, I had mentioned 1.0880. So that's probably why I wouldn't even have taken this hourly. But you can see price rejected exactly from the hourly bullish high exactly to the pip right here, and then rejected up for 60 pips. So right, you can always use that analysis to decide. So yeah, so those are three trades I had set up for you guys yesterday. The EU break and retest from this trend line for a buy. Gold, same thing. When it broke and retested this trend line. US 30. So I just went over the analysis for US 30. So I did say, two sells and one buy for US 30 based off of the account that automatically takes the golden and death crosses only on the 15-minute time frame, and I think hourly time frame. I think this is just a 15-minute. If we look at the breakout scanner, also in my other account, this trade. So this is a different account. So this is the hourly reversal for US 30. Again, on the hourly, you can see clearly left shoulder, head, right shoulder. So what I wouldn't want is for price to close above this head right here, in which case I might just cut only this trade from the account. Does anybody have any questions regarding any analysis for either US 30, gold, or EU? Also today, definitely be, I wouldn't be trading anytime from 12 noon, because between 12 and 2 p.m. Eastern Standard Time, the volatility will literally die off. So you don't really want to get stuck in positions before FOMC. But for me, I'm going to hold everything because I trust the analysis. So I was talking about what the breakout scanner. So breakout scanner also yesterday gave us the sell, but the sell came at like 4 p.m. Eastern Standard Time, which is a time that I normally don't trade. But we did get that sell that I mentioned during the live session. So yesterday during the live session, price was somewhere around here, and we were waiting for the sell somewhere around here, but price reversed and gave a buy. But you can see this buy was didn't go too far, and I'd mentioned I wasn't going to take any buys yesterday for US 30. So I'm hoping this is just a fake out or a stop hunt for the sellers before they then bring price down. The other thing I'm looking at on the breakout scanner for US 30 is the hourly time frame. So you can see, if, for example, this hourly candle reverses and closes below its low, this will be a sell signal on the hourly time frame. So you can see on the hourly time frame on the breakout scanner, we haven't had those. We haven't had a sell. The last time we had a sell was 5th July. So that was about 3 weeks ago. So on the hourly time frame on the breakout scanner, we are ripe for a nice sell. And this is this trade I was talking about. For this trade, I would use a 150 pip TP and stop loss, and probably use what is it? Probably use a 2% or 3% risk for that trade. So this, the sell, if it even when it does come, it will be somewhere down here. And of course, I always mentioned with a breakout scanner, you want your stop loss. So for example, if you're taking a sell, we would want our stop loss below this consolidating region or this darker shaded region, because if price broke up on the other side, it would give a buy. But anyway, this is one major entry I'm looking for. Hopefully we get it right now during the New York session. If not, it might come after FOMC. So again, right here, just observe the closure. So observe this trend line. So if we get, in short, if this hourly bearish high fails to hold price down, so this is what I would want to see for US 30, this hourly bearish high, and then rejection, retest, and then back down. But if this doesn't play out and price keeps creating higher highs here, this head and shoulder pattern might be invalidated soon. So this is what I would want to see for US 30. But for me personally, I am still bearish on US 30. I want to see if my account is going to get a buy here, because I think we might be forming a golden cross on the 15-minute. Does anybody have any questions? All right. Wait, and I don't know if I was, maybe I'd muted my speakers. So if anybody has questions and maybe they were speaking out, let me know. I may have missed it. All right, so if this, so for example, let me show you what would happen if we get a golden cross here. Okay, so you see we're about to form a golden cross on the 15-minute time frame. So with the account that's taking trades automatically, automated account, if this does close with a buy signal, that account will automatically take a buy here. So I'm not telling you guys like to take that buy, but I'm just showing you guys how ideally I would be locked into 4 positions. So if this buy does materialize, I would be in 2 sells and 2 buys. So if either does hit, technically I would end the day at break even. So what I would hope for, if we got a buy here, what I would hope for is to eventually get a sell and the sell goes through, such that 4 trades would hit break even, and then the 1 sell would hit full TP and I would be up. And keep in mind, for this trades, I'm risking 2% per trade. So since my bias is still a sell and the first trade was a sell, I just need 1 sell to go through straight to TP and I'm up 2%. If the final trade is a buy and the trades go up, I'll just end up the day at break even. So that's the logic behind this trading way I'm doing. And ideally, right, I hate this, right? I hate consolidation. And unfortunately, that has happened the last 3 times on the 15-minute time frame. So if I were to go back here on the 15-minute time frame, we see here there was consolidation. This is consolidation, right? The death cross failed to materialize. So ideally, the price action I like for this trade, so I'm looking for, is like this, right? No consolidation, so a buy that would have gone straight to TP, a sell that would have gone straight to TP. Of course, this would have been break even, this would have been break even. Buy, sell, this would have been full TP for this buy because this would have been break even. But you can see the price action I'm looking for. Also, if you go on the hourly time frame, it's a bit more clearer there sometimes, because you have like this buy that would have gone straight to full TP, this sell that would have gone straight to full TP. I know we did take this buy when it showed up the other time. So what I hate with this with the way this strategy can go is consolidation, but the best part of that is that you just end up the day at break even. So, but it's just annoying to not hit TP. So we'll see if I get filled in on this trade. But given that we have FOMC, I do see possibility of US30 pumping up as opposed to going down for now. So I do see it going up for now, and then during FOMC, that's when they would bring price down.
Just a quick question, bro.
Mm-hmm.
So how do you do for to calculate your your risk?
Mm-hmm.
If I remember, you are using it on like a challenge. Is that correct?
Yes.
So like you have like 5% drawdown. So how do you do do you have a limitation on the trades that it can be taken at the same time?
No, I don't have a limit. So my logic here is how wide of a stop loss do I need such that a buy and a sell does not hit stop loss at the same time, right? Because this would be the worst thing for this. So here, if I had 100 pip TP or stop loss, so let's assume I had 100 pip TP and stop loss right here. For this sell would be hitting the first sell, right? 375. 27, so 375, 475. So the first sell would have hit stop loss. Okay. For the buy that would have been in, the second buy that came in, so I would have been minus 2% if I was using 100 pip TP and stop loss. But then there's this buy that's right here, the buy that's right here. So for that buy, 433, 333. So it would have been down 4% if I was using 100 pip stop loss. So the key thing here is to see how big of a stop loss and TP do you need such that both a buy and sell do not hit stop loss, and then you end up at 4%, if that makes sense. So for me, the logic here is a 200 pip TP and stop loss, because I know for US30 to go 200 pips, it's more than likely it's not a fake out, especially on the 15-minute time frame. Maybe on the hourly time frame, because for example here on US30, I did have a sell on another small account, and literally my stop loss was right here and it got stopped out and price came back down. So but that was on the hourly time frame. So the key thing, if you're doing on the 15-minute time frame, just check whether it's on the 15-minute, whether it's on the hourly, just back test and see if I use 100 pip stop loss, am I likely to get stopped out of a buy and sell at the same time? Because when you're back testing, ideally, you also want to look at consolidating periods, because not every time will you get price moving straight to TP, right? So for example, here on the hourly, you can see that on the hourly time frame, using 150 pips, TP and stop loss, pretty much all these trades would have gone straight into TP. So this is what you don't want to back test with, right? You want to look for areas where price was consolidating. So normally when I back test, I'm not really interested in all these trades that would have gone straight into TP, because that happens in a perfect world. So what I would be looking for here, if I was back testing this, for example, I would look at this. I would look at this cell right here. So I would look for a trade that would give me stop loss. So for example, here, I would come in here. So for this one on the hourly time frame on the breakout scanner, right, my stop loss and TP going forward, if I do take these trades, will be 150 pips TP and stop loss. So I see this sell, I would have hit stop loss. Okay, perfect. Then I see this buy right here. This buy, right, stop loss. But for this one, like, what can you tell with the buy? The buy, ideally, this is a stop hunt, because price came down where it should have given a breakout sell, it did not. So in this case, then I can tell myself, okay, whatever I'd gone for, 200 pips TP, 200 pips stop loss. So you can see even this one, it's ideally would have gotten stopped out, but ideally it's a fake out. So I want to find that optimal position. So if I would have lost with 150 pips TP and 150 pips stop loss, so I just go back here and stick to 150, 150, and then I back test with that going forward. So if I back test with that going, so remember, you only need to have a net positive win rate, because you're not going to win all trades. So with 150 pips, I keep testing. So I go back here, there was a buy here. So this particular buy would have survived stop loss by like a pip or half a pip. So that's good for me. Because again, you don't want too wide of a stop loss, and you don't want too narrow of a stop loss. So that's the logic behind how much I decide to risk. It's always based off of my TP and stop loss, if that makes sense.
Yeah,
So
yeah, thank you.
yeah, and for example, in this trade, I'm still in this trade. So I'm still in what? I'm in two sells and one buy. So this sell that would have hit TP with 100 pips is still in the game. So worst case for this trade right now, if we do get a buy, it's gonna go ahead and enter. My hope is that we get a buy and then we get a sell. So if we do get a buy, I'm hoping we end up getting a sell. Yeah. So and if here's the other thing I thought about today, right? So if you're targeting a sell, you just want, even though you end up consolidating, you want your final trade to be a sell, if that makes sense. So you want your final trade to be a sell, because if your final trade is a buy, you'll just end up at break even more than likely. Because if US30 is to start at 200 pip move right now, it would go ahead, hopefully give me that buy, and then go ahead and stop out the sell, hit TP on the buy, so that would be break even, and then hit stop loss on this sell, and then hit TP on this other buy. Yeah, so that's ideally the logic behind this. So unfortunately for this particular strategy, it's just been ending up at break even every time it's tried to give me a trade.
And yeah, another question also. I don't know if it was yesterday or the day before. You mentioned that sorry, that there were a good strategy we can use on breakout scanner on the 1 hour.
Yeah. Yeah, so for the 1 hour, and this is again thanks to Marcus. So I haven't tested on other, I mostly trade US30, but if you can look at US30 on the 1 hour, you can see we had a buy here, right? A buy there. This would have gone to full TP. We had another buy here, would have gone to full, and by full TP I mean, right, I did the same thing. So I came in here, I asked myself, so normally I use 200 pips TP on US 30, right? But this is the hourly time frame, and hourly time frame might move a bit heavier. So I asked myself, I did the same thing, 200 pips TP and stop loss, and then I back tested. So this full TP, again here, full. So I would actually consider this swing trades. So full TP there. This buy right here would have been fired right there, full TP. This buy right here, full TP on that one as well. And here, this buy, it's on this candle, full TP on that buy. So again, right, what don't you want with any of my strategies? You don't want consolidation, right? So which is why we don't use the 5 minute, the 1 minute on any of my indicators. Now, if you go to the 15-minute time frame, you'll see a bunch of buys and sells at the same area. So let this thing load, right? So this is what you don't want to see: buy here, sell here, right? This is just telling you consolidation. So the higher the time frame, the lesser the trades, but the high probable trades you get. So for example, I was talking about it yesterday or the day before. I was saying for this particular trades, I would be risking either 2% or 3% on the hourly time frame. And since this is the hourly time frame, right, I didn't see anything, whether it was buys or sells, I didn't see anything wrong with using 150 pips TP and stop loss. So let's try and find a trade that would have hit stop loss. I think we did find it, right? This sell right here would have hit stop loss. This sell right here would have hit stop loss. So if I was risking 2%, I would be down 4%. But then guess what? I take this other buy, I gain back at 2%, so I'm only down 2%. I take the next buy, 2% risk, I'm back to break even, right? Because these two trades hit stop loss, these two trades hit full TP. Again, it also depends, right, when you decide to start taking the trades, because somebody who started taking the trades here, of course, they would have started the day or the trading week with a loss. But for somebody who was lucky enough to start their challenge here on this buy, guess what? They would have passed phase 1 in 1, 2, 3, 4. So in like Monday, 10th July and Monday, 18th July. So they would have passed phase 1 in like a week. So sometimes, right, it also depends if you're in luck or not. So yeah, so the hourly time frame. So if you look at this, so this, we just looked at it, we found it would have hit stop loss, and I see US 30 is coming back down, which is what I want. I don't want to get into a buy, and hopefully this thing did not fire. It might. We have 2 more minutes to go. Okay, so if US 30 gets into a buy, I'm hoping it keeps falling, and then we get into another sell. So yeah, I wouldn't, so as much as that account, so remember the account that's going to enter this buy, because unless in this last minute and a half, US 30 closes below the 9 EMA, invalidating that golden cross, I wouldn't recommend anybody to take this buy unless you're like trading my strategy where you're taking where you're locking into positions. I would say yes. If you're already in 2 sells and 1 buy like me, I would say go ahead and enter. But if you haven't taken any trade for today, do not enter any trade, or do not enter that buy. Where was I? Yeah, so let's keep back testing this. So let's see. So we found this would have hit stop loss, right? So 1500 here, so 150 pips, right? Stop loss. But this one, this sell right here would have hit full TP on that one, full TP on this one, full TP on this one as well. This buy right here, 307, 150, that's 457. So this would have been close, ideally full TP, but this one might have messed with you depending on slippage. This sell right here, I can tell this went to stop loss, but you can see the idea behind the 1 hour time frame, right? Yeah, because for me personally, you know, I did mention this like a couple of weeks ago. I'm trying to transition to become a swing trader, so I'm trying to take fewer, and you know, going forward, I'll be trading less and less. So I'm trying to find those entries that I have like a 80% probability, 80, you know, at least an 80%, and then I just do like 3% with it. The other nifty little trick I can suggest going forward using this indicator, try to, if you're going to do a challenge with this, if price is already in sells, don't try to keep catching sells. Wait for the buy to show up. right? So wait for the sell momentum to loosen up and then take the first buy, right? Similar to how when we trade using this crosses indicator, we say, let me see, I think due to slippage, this thing did not enter. I might have to enter this manually to lock this position in. Give me 1 second. I think due to slippage, this did not go through. Give me 1 quick second. I may have to manually lock this position. Where was that? Just 1 second, because I'm not trying to that's, oh, those don't fire. Okay, I need to do this manually. Give me 1 second because I don't want to. Okay, perfect. That's what I wanted. Okay, so right now I'm ideally locked into those positions. I need another sell in order to, I'm hoping we get a sell so that hopefully the sell goes straight into TP. Let me remove this one. Okay, where was I? I'll come back here. Yeah, that's the logic behind that. You would want ideally to start, even when I was starting this challenge, I waited until this time, and unfortunately we got consolidation. When I was starting this challenge, I literally waited until, because I was waiting for this death cross, so I literally waited until US 30 was here, and then I bought my challenge because I was hoping to catch the sell from this point on. But unfortunately, I just ended up at break even during this day, and during this other day, one of my buys, the buy wasn't caught, so I ended up like negative 2% on the account. But yeah. So here, so what we are looking for here, we are looking for the sell on the 1 hour time frame, right? So this again would be, if I didn't already have a challenge going, this would have been a point where I would have bought the challenge. The only thing that I don't like about how this entry is gonna give us is the news later on today. But again, right, you can always think of news as a positive way so that it can kick price to your TP. But if today wasn't like a heavy news day, I would have been looking to buy a challenge here to take this first hourly entry with like a 3% risk, or maybe 3% might be a bit high. So maybe 2 or 2.5% risk. So let's see what we get here. So today, if we get a trade on the live session, it would be if we get another sell. So currently right here, I'm in this buy, but this is automatically, right? So this is not like an official trade. So this is a trade that just entered automatically on that one account so that it locks my position. So I'm in 2 buys and 2 sells. So worst case, I end the day at break even. But what I'm looking for is a sell. If we get another sell right here, I'm hoping we can have enough momentum to push down on US 30. For gold, right here, I'd try to draw this trend line on gold from this lower low to this high low. However, I didn't really like how it was cutting through a bunch of candles. So for gold, I'm gonna wait for another high low. So hopefully this ends up being another high low so that we have this static trend line. But currently, those are the trend lines I do have on gold. Also, keep an eye out for these trend lines because during FOMC, and I've noticed this and this is why I normally draw trend lines, you'll find price picking up liquidity. So we can drop, have like a quick drop here, price bounces off of here and closes back above. So watch out for this trend lines during FOMC. So if you see price stopping at like this trend line, so we get a major drop and it stops, right? those are nice areas to pick up like rejection from. Right. So this is what I wanted for US30. As I mentioned, I did not want price to go above this trend line. I didn't want an hourly candle to close above this lower high, right? Because this is the pattern I'm looking at overall. Left shoulder, head, right shoulder. So I need US30, and you can see US30. I have this trend line. So if I delete this head and shoulder pattern, you can see I have this trend line from this higher high to this lower high. And you can see this hourly candle literally came back and closed below that. So we need this hourly candle to close below this trend line and then keep falling. So we don't want this hourly candle to close above and then ideally have that as a break and then have the next one as a retest and then could signify a reversal to the upside. So we need this current hourly candle to close below this trend line and to close below that 9 EMA right there. Yeah, but the trades I'm in, this four trades, 2 sells, 2 buys. So ideally hoping to end the day at break even. And then there's this reversal from yesterday on the hourly time frame that I mean, I think Desire, you're in this trade as well. So personally, I'll hold on to these trades because the trades are valid to me. Also on the 4-hour time frame, we did get a 4-hour sell on US30 last night. So doesn't mean that US30 will keep dropping, but you know, I just like seeing a sell on the higher time frame. Also, ideally on all high time frames, we have a head and shoulder pattern. So I'm hoping with all those confluences, we finally get that drop at some point. But between now and FOMC, this is what you should expect. Just expect a bunch of consolidation in the market, up, down, up, down. Hopefully FOMC takes price this way. It is possible it can wake up and wake down. So just know the risk of holding trades into FOMC. So if you're already like in this reversal and you're not comfortable with holding this trade, I'll just say exit the trade at break even. And then just wait for, we're definitely going to have trades like tomorrow or after FOMC. So you can save your leverage for then. Any other questions?
Yes. I was wondering, like, you know, sometimes all these strategies can be I know how to explain it. Like, for example, you can be on a sell on with the reversal strategy,
Mm-hmm.
but at the breakout scanner, you have a buy.
Mm-hmm.
So like how, for example, if you use like us, we took a reversal sell on US30,
Mm-hmm.
but there was also, it can also have a buy using the
Mm-hmm.
breakout scanner. So
Mm-hmm.
like how can you recommend using it? Like use on separate accounts to be sure, like to not be in a buy and a sell at the same time using different strategies.
So ideally, I don't recommend doing one account. Okay, I think I see what you mean. So you can do that on separate accounts, right? So you can say this account is for the reversal entries and this account is for the breakout entries. But just know that not every time. So this week or this and last week, the breakout scanner has had, and breakout scanner always has like high, right? It's the second best performing indicator after the crosses indicator. The last 2 weeks, the breakout scanner has had nice entries for market open. So I think back to back last week, every time when the market opened, the breakout scanner gave a buy. As much as personally for me, I was looking for a sell, even with the reversal indicator, I got stopped out of the reversal indicator, but the breakout entries would have gone straight into profit. But ideally for me, my logic every day is have a bias, right? So for me, my bias has been shorts in the market.
Wow.
Yeah, so that's what's gonna allow you to then decide, are you gonna use the reversal indicator? Are you gonna use the breakout indicator? Are you gonna use the crosses, if that makes sense? So like right now, my bias, just by looking at the trend, and trend lines on the hourly time frame help me have a bias, because for me, I never trade when price is between trend lines. So I always wait for price to retest a trend line and go back below. So for example, here, if I was waiting for confirmation yesterday, I would have entered, if I wasn't already in the reversal we were in, I would have entered this sell on US 30. I would have entered the sell here because it was a break and retest of a major hourly trend line, right? So I would have already been in this sell based off of the break and retest. So my advice is have a bias at the start of the day. So as much as for me, my bias is for sells on US 30, keep in mind I've gotten stopped out of the 5-minute, 15-minute, and 30-minute reversal entries. So it doesn't mean that if my bias is a sell that US 30 is going to go down. I mean, clearly I've gotten stopped out for the last 3 US 30 or 2 US 30 trades. So I would say do your analysis and then use the indicators to give you an entry.
Okay, thank you.
Yeah. Also, so let's go on a higher time frame for US 30. So let me use this chart. Let me turn off this. Let me turn off this. So if we go on the higher time frame for US, so keep in mind we are like 1,500 pips away from the all-time high, if I'm not wrong. So if we go on the daily time frame, we see this reset. So we are all-time high is about 37,000 or 36,990. So we are at 35,500. So yeah, we are about 1,500 pips away from the all-time high. So I did mention that between now and, you know, for the last 3 years, between a period like this and September, October, US 30 has normally gone down, and then around September or October, US 30 goes and creates about the all-time high. So this was the case. So let's see, let's go back last year. So we are in July, right? So July here, June, July, August. So between July and August, July, that's 2021, my bad. Let's go to July 2022. Okay, so you can see July 2022 to August, to mid-August, US 30 created higher highs, right? And then what happened is that there was this drop. So it went up and then created this drop till October, right? And then guess what happened after October? Went up to December, that pattern. So same thing, 2021. Let's see if we can find that. 2021, we have in July. So this period right here. So to mid-August again, Friday, 20th August 21. Then you had a breakdown till September. What happened after September? Kept going up, right? I'm pretty sure, I know I started trading in 2020. So let's see in 2020 what happened. I know it was COVID and all of that. So July, August, 31st August. Then what happened to October? After October, right? Same pattern, 3 years in a row between this time. So maybe right now I might be early in the game shorting US 30. And I might have to wait for mid-August. But if the same thing is to happen, whatever happened last year, whatever happened the year before, and whatever happened the previous year, and I can keep back testing, but you can see for 3 years in a row, between June to July or June to mid-August or end of August, price has gone up, then dipped, and then recovered sometime in October. And I'll leave this chart here. So hopefully what I'll be looking for here is this pump up to July. So let me put it mid-August somewhere. So look at this. If I'm looking at where price can reverse from, look at this daily candle on 10th February 2022, right? That's the next high that US 30 can come to. So around 35,853. So maybe that's the best place to short US 30 at 35,853. And then September, we go for the all-time high. So let's see, I'll leave this pattern up here. So let's see if this is gonna go. So maybe I'm early trying to short US 30, and it is definitely possible. But you can see the back test we just did right here for the last 3 years. If the same thing is to repeat itself, this is what we expect for US 30. So we'll see if that happens. And let's see what's there. So that is what price point is this? This is 35,853. Let's see where our trend lines or what we have. So 35,853. You can see 35,853 can easily line up with this top trend line. So yeah, it is possible that US 30, I may just be early in my shorting of US 30. So yeah, this is definitely possible. So this, if this is gonna happen, today is gonna be the day, right? Today is gonna be the ignition. FOMC may create a candle that breaks through these two trend lines and closes above, and then we are end of July. Ideally, this on Monday is end of July. So over the next 2 weeks, so yeah, if I'm to, you know, as much as I hate this because I'm in sales, right? Sometimes you just, you know, when you're analyzing the market, just make sure you're objective. You're not really trying to make up analysis that are making you feel comfortable about the positions you're holding. So being realistic and based off of the back testing we've done there, FOMC can be the ignition of this. And then the next 2 weeks, this is what we see on US 30 right here. And then I drew this terribly. Where is that? Yeah, FOMC might be that ignition, break and retest and close above, have a fake out to trap sellers, and then come back above, and then retest that trend line before they move down from mid-August to, what was it, end of September, and then come back to go for the all-time high. So yeah, as much as I hate that to happen, that is a major possibility. But anyway, I'll just stick to what I have right now because it does make sense for right now. So we'll see what happens. Any questions from anyone? Let's see what we have on gold. So gold still has the what is it called? Let's go to a clean chart on gold. So let's do gold here. Gold still has the inverse, I'm sorry, the head and shoulder pattern on the hourly time frame. So you can see if I draw this, we do have left shoulder, neckline, head, neckline, right shoulder, right there. So that's still possible for gold, but you can see on the hourly time frame, we've started creating high lows, right? Based off of this markups that I have. So we did have this lower low, we had this high low, we had this closure and break and retest of this major trend line on the upside, and then push to the upside. But right on the higher time frame, we do have that. I'm curious. Let's see what gold has done for the last 3 years during this time frame. So last year, 2022, July. So in July, we had, let me just use this. So we had a downtrend and then uptrend to mid-August. So you can see this period, right? July and August are heavy decision times right there. And it dropped till October, right? Same thing, almost same thing with US 30, right? And then pumped up from there. So we ideally had that. So that's 2022. 2021, what do we have? 2021, so I'm looking at June. June to, so this is still June. So June, July. So this downtrend started in July, went down to beginning of August, and ideally went up. So ideally the same thing, same movement right there. In 2020 COVID, I know that might be different movement because it was mostly fundamentals, but July. So you had this, created an all-time high in July. Actually, wait. Slight reversal. So you can, so let's go to 2019. Same, let's look for that, May, June. So 2019 ideally was a push up. And I know COVID hadn't started in 2019, but anyway, so for the last 2 years, gold has had this pattern, right? Drop to mid-August or, oh, I'm sorry, from July. Wait, what is it? Drop, reversal, and then drop, and then reversal. So drop, reversal. So doing the same thing here. Where is June? Because I'm starting around June. So June drop, July. So this is where we are at. So hopefully, right, possibly that. So let's see if that is going to stick as well on gold. So if this pattern has happened the last 2 years, this might be happening today or in the between now and August. So let's see how that's gonna go. EU, I'm not gonna do that with EU, but hopefully you guys get the idea for that. So for here, how you'd trade gold based off of where gold is. Right now, I would be looking for creation of another high low. I'm anticipating this 1964 to be a high low. The reason for that is because I need another trend line to even think about trading gold. So I would like this to be established as a high low. So this right here would be a static trend line. I'm sorry, hanging trend line, ideally because it's not connecting at least 2 points of structure. So for me, until gold creates another high low, hopefully this will be it. I'm not going to be looking to trade gold. And let's assume it creates a high low there. Of course, what you would now be expecting is if that high low holds, gold should ideally keep going up. But if this high low does not hold and we break and retest, gold is coming back down and ideally fulfilling that analysis we've done on the daily time frame. US 30, as I mentioned, just between now and 2 p.m. I wouldn't recommend you guys to trade between now. Actually today I'll do, let me see if I have time to do it. We can do FOMC live trading, but it will have to be, give me 1 second right here. At 2 p.m. Yeah, we can do FOMC live trading. Now, FOMC, the rates will be released at 2 p.m. I don't expect anything to happen at 2 p.m., anything major. I just expect a bunch of fake outs at 2 p.m. This is what I'm looking at, 2:30, when Powell goes ahead and does his speech. So we'll do the live session. We'll probably start at like 1:55 p.m. Eastern Standard Time, and I'll send a link out in the Discord. But I really, unless there's just something obvious that shows up at, and remember the news strategy, I normally wait for the first 5-minute candle after news before making any trades. So unless something makes sense to take at 2:05 or 2:15 p.m., I will not take anything. The best trades will be at 2:45 p.m. Those will be the best trades. But anyway, I'll send out a link in the Discord, and if people are down, we can do live trading for FOMC and see if we can catch anything. Unless anybody has any last questions, that will be it for today. I will see you guys at 2 p.m. All right, bye guys.